Hi, and welcome to part 5 of my video series on central banking in the United States. So, we go through the 19th century, most of it without a central bank. We get into the 20th century without a central bank, but there's this desire to have one and this need for having one. And so, finally, in 1913, they passed the Federal Reserve Act. And this creates the central bank that we have today. Now, this had to be a compromise that would pass both parties. At this point, it's the Republicans and the Democrats. Okay, the Republicans had succeeded the Whigs in around the election of Abraham Lincoln. The Democrats have been around since Andrew Jackson. At this time, gosh, I spelled that wrong, didn't I? Democrats. Okay. At this time, the Republicans are the predominant party in the country. Okay, the Republicans are still seen as the party of the North and the Midwest. The Democrats are definitely seen as the party of the South. Maybe a little bit as the party of the West, but not too seriously. Okay. The Republicans are definitely seen as the party of money. Okay. And so the Republicans are the ones that really want a central bank, but they're going to get the Democrats to go along with them this time if they put it together the right way. And they did put it together the right way, so it's lasted over 100 years. Okay? So part of the problem with the earlier banks was they were seen as being regionally dominated. Okay? So the Democrats were arguing and the Republicans gave in and said, we can't have this seen as to be a bank of the North or Northeast United States. And the other problem with the first two national banks was they were seen as creatures of the Federalist or Whig parties. And again, the Democrats were not going to let the Republicans create a bank for Republicans. It had to be a bank for the whole country. So they organized it in a very decentralized way. So it is a national bank, it is a central bank, and so it does have to have a main office in Washington, D.C. Now, this office is called the Board of Governors of the Federal Reserve System. And when you say it's called the Board of Governors, you think, oh, well, that's just 10 people sitting around a table with a couple secretaries. It's kind of weird that this is the title of the office, but I mean, this is a big building with several thousand people working in it in Washington. Okay, there are some governors, there is a board, but I mean, it's a big operation. Now, one of the things they made very careful of is they did not want this to be associated with the government. So it is independent of the government. Okay? Now, not completely. I mean, it's in Washington, so they talk to each other. It's right down the street, so there's a lot of interaction, but it's independent in the sense that the president can't go in and start firing people in the Federal Reserve. Congress can't go in and start firing people in the Federal Reserve. It runs independently of them. So it's kind of like they've set up this private corporation with a little bit of government influence at the very top and just basically let it run and do its thing for the last 100 years. Okay? So I said that this was decentralized, and so the idea was to make the central office kind of weak and kind of independent. Okay, so then what they did is they combined this with 12 branch banks. And these are located around the country, and within the system, these have a lot of political power within the Federal Reserve System. And because they're scattered around the country, they deal with this idea that we've got these concentrations of people in different locations, and they keep the whole thing decentralized. Now, there is a layer of branches under these 12 branches, but those are far, far less important. Okay, so there's actually one of those lower level ones in Salt Lake City, but they're nowhere near as important as these 12 branch banks around the country. These are big time. Salt Lake is a much smaller operation. Okay, now where are they going to put these 12 branch banks? Well, they're going to put them where people actually lived in 1913, so that's still mostly in the Northeast and the Midwest. The other thing that is a big focus of them is, if you remember from part 4, everything is being shipped around the country on railroads at this time. And this is all of the mail in mail bags in mail cars on the railroads, and all the checks are going through the railroad system. So these branch banks had to go in big cities where there were railroads, and in particular railroads coming from different directions and intersecting, so they could take stuff off one train and run it through the bank and send it out on another train. So they're looking for nodes in the network. Another political issue they had with these parts of the country, of course, is all the big cities wanted to have a branch bank because they could tell there was going to be, it was going to be good for the local city environment. But the states were arguing about this, and so the states wanted no more than one of these branch banks in each state. So, of course, they go to the big cities. Boston, New York, and Philadelphia are the big cities at that time. Okay. Washington, D.C. is not that big, and it doesn't get one, but it's got its own office here. Okay. They also put them in the Midwest and the big cities out there, which are Chicago. And a lot of people are kind of surprised about this. It's still a very big city today, but it's been a huge city historically for the United States, is St. Louis. Okay, not nearly as big as Chicago, but bigger than all the other nearby cities. Okay. Now, what are they going to add on top of this? Well, they're looking at places where there are railroads. Okay, so Philadelphia is in Pennsylvania. A lot of people, a lot of money in Pennsylvania. They could have put one in Pittsburgh, in New York. They could have put one in Buffalo, which was a large city at that time. But Ohio is right next door, and Ohio's got a lot of people and a lot of money as well. So instead of putting one in Cleveland or in Pittsburgh or Buffalo, they get one in Cleveland. Okay, they're also thinking about railroad networks and intersections of railroads. And if you go down in the South, hey, it's 50 years after the end of the Civil War, but the reason the South had their capital in Richmond was that's where the rail lines intersected. And the reason why in the end of the Civil War it was such a big deal when Sherman marched on Atlanta was that Atlanta was where the railroads intersected. And so these were the big railroad intersection points in the South that could suck in a lot of checks. Okay, going out to the Midwest, a couple others that are like this. Okay, Dallas. We don't realize this today because Dallas is a huge and beautiful city, but it pretty much exists because it was the place out in the middle of nowhere where the railroad tracks crossed each other, and then they built a city around it. Kansas City has always been a huge railroad hub and was the takeoff point for all the traffic in the Great Plains. Okay, another large city on the North Plains, Minneapolis, got a bank. And so there's 11 here, and the whole rest of the country gets this Federal Reserve Bank of San Francisco. Of course, because this is out in the West, and at that time, nobody really lived out here. There simply were not that many people. Okay? Now we flash forward 100 years or so, and the area around Richmond is not as important as it used to be. The area around Minneapolis is not as important as it used to be. Some of these big cities have gotten smaller, and San Francisco's gotten huge. So there's actually been talk over the last 10, 20 years or so that maybe what we need to do is take San Francisco's region of the country and add 2 more branches out here in places like Denver or Phoenix or Seattle, maybe even Salt Lake. Okay, I think that's a good idea. I certainly think the Federal Reserve Bank of San Francisco is doing an awful lot of work. Now, Within the Federal Reserve System, each of these banks manages its own area of the country, okay, regulates the local banking and financial system, okay, and then they also have a role within the system about what they're supposed to do and keep track of, so they don't all duplicate each other's efforts, okay. So St. Louis is the bank that actually collects data for everybody. Minneapolis is the one that does really serious macroeconomic theory. Okay, Federal Reserve Bank of Boston did a lot of research on mortgage lending and whatnot. Okay, so they all kind of do their different things. And currently, that Federal Reserve Bank of San Francisco is kind of the big monster because we now have a third of the country living in its area rather than something like the 5% that we had 100 years ago. Okay, I will see you in part 6. Bye.